So the European Central Bank convenes tomorrow, July 21st, and bottom line, no change is expected in policy. Why no change? The ECB already did a lot, okay? The ECB has enhanced its QE program. It now buys 80 billion per month since April, announced in March, implemented in April. The interest rate has been lowered several times. Currently, the main lending rate is at 0. The deposit rate, negative -40. Also, last changes were in that big March meeting. And no change is expected now. Another reason for no change is because there are no fresh forecasts. Remember, the ECB convenes 8 times a year, but only in those meetings in March, June, September, and December, it has fresh forecasts, okay? The big questions for Mario Draghi and his colleagues in Frankfurt are, is there any progress on inflation? Recent data does show that, well, headline inflation did turn positive. That's, of course, good news, but that's only 0.1%, and core inflation is still under 1%, so not very convincing, I would say. And the big question, will the ECB do more? I highlighted this. There is a chance it'll do more, not only because of inflation, well, that's its main mandate, but it might need to do more because it might be running out of eligible bonds to buy, and because of Brexit. What's going on in the bond market? The ECB has a limit of buying bonds with the yield up to -0.40. Okay, so if a German 2-year bond, for example, gives us a yield of a negative yield -50 basis points, the ECB cannot buy it anymore. So it runs out of bonds for buying, okay? So it needs to buy either longer maturities or enlarging its buying from countries that have more positive bond yields, okay? But the ECB also has put limits on this. Okay, it wants to spread out its bond buying, and it has these capital keys. It can't buy too much of a specific bond, okay? Making it a bit abstract, but these are questions on the agenda. First of all, will the ECB changed its capital key rules? That means now it can buy, for instance, more Spanish bonds, more Greek bonds than before. But this has political problems. You don't want the ECB directly supporting those governments with moral hazard or picking winners in markets or things like that. We might see some small changes, but I'm not sure this will happen. But basically, if it cannot, it might begin having a problem of finding eligible bonds. The ECB also buys corporate bonds, which is also a bit problematic politically. I mean, how do you choose which companies to pick? And also here we might have changes. Again, I don't think it'll come now. Another change that could happen is that they will just lower the interest rate from -40 to -50, and then they have more bonds to buy. What I do expect this time is, again, no change in policy, but a hint about potential changes in September. Not a very clear move like we had in January when we heard the ECB told us we will reconsider monetary policy next month. Beware, we will do some kind of change. No, not this time. They'll probably leave the door open and keep it a bit more vague, and this will, in my opinion, keep pressure up on the euro. Okay, so these are the main things that the ECB can do. But there will be also other questions in the press conference. Impact of Brexit. We've already seen the zoo figure. We'll have more figures later on. The IMF predicts that Eurozone economies will suffer. And Draghi will refer to that. He expressed sadness about the UK's decision to exit the European Union. Let's see if, apart from emotions, he'll also offer some fresh forecasts. I believe he'll wait for that for September. Perhaps he'll also put, okay, we'll have a better assessment of Brexit, the Brexit impact by September, and then this will also give us input to act. Okay, so it's not only inflation, it's not only a new forecast, but it'll be also Brexit. Okay, other events in that are other topics on the agenda. Italian banks non-performing loans in Monte dei Paschi and perhaps other Italian banks. It's an ongoing trouble. The Italian government the Italian government wants to use taxpayer money to help the banks, but it's against the EU rules, and there's a clash over there. Now, Draghi personally, as the former governor of the Bank of Italy, might be involved in not taking care of this crisis early on, 10 years ago, 15 years ago. He's Italian, of course. So I think he'll get lots of questions about that. And the ECB here, Draghi specifically, is in a sticky situation. It's more a clash between the Italian government and the other governments, the European Commission. But he'll be asked also about that. I don't know. I don't think he'll provide with. He'll sort of throw the ball back to the court of the governments. But anyway, it'll be a point of contention. He will say, talking about governments, that governments need to do more, not only with taking care of banks, Italian and other banks, of course, Italy. It's not the only place where there are banking issues. Also here in Spain, there's lots of trouble. But also regarding stimulus, remember, when we're talking about negative bond yields, we're talking about, what does this mean? It means that when the government of France, of Germany, of Spain, of Italy wants to lend money in markets, in some cases, investors pay the government to hold the money. This happened last week when in the primary market, not in buying and selling bonds, but when the German government issued a 10-year bond, investors pay the negative yield. That means that they pay the German government in order for them to hold the money. And in this scenario, when lending is not only cheap, but is already reversed, you would expect governments to invest money, right? And this is not happening. So he'll urge governments to do more. Another point of contention with journalists and with governments. All in all, to conclude this ECB preview, no changes expected, but big hints about changes in September are on the cards. Brexit dependent, bond buying dependent, inflation forecast dependent. I believe that Draghi will try to weigh on the euro. The impact will probably be relatively limited. Unfortunately, in the last Draghi shows, the impact has been limited. And perhaps the fall of the euro that we're seeing right now, let's take an updated look. Well, it's not such a big fall, but I would say that if we have euro-dollar sliding a bit more during tomorrow's morning session, then I would wouldn't expect to extend the falls too much, even if Draghi is dovish. He would need to be extremely dovish to push it lower. Or on the other hand, if he says business as usual, everything is hunky-dory, then I believe the euro could bounce back up. But markets are expecting the ECB to react to the situation of less bonds to buy, risks to inflation, Brexit, and to keep the door open for more stimulus. One thing I did not mention up to now regarding the ECB, but it's quite obvious, the ECB's QE program is due to end in March 2017. Nobody believes it will end then. It's only 8 months away. So the ECB will probably also, not now, probably in September, announce an extension of at least another 6 months. That's sort of taken for granted, priced in by markets. Okay, so that's the ECB preview.